All right, so this is the questionnaire. It's like a somewhat of a guide for you to go through. So whenever I get on the phone with someone, first, the one thing I didn't add, of course, as I'm recording this video and realizing is I ask a little bit more about the agent. So I say, hey, so looks like you've been working with, like, let's say I'm talking to the client I just referred to you, Mary, or whoever's watching this video in the future. I just refer to client to Mary. I'm the agent. When she gets on the phone, or if I'm pretending to be her, I say, hey, so, Cameron told me a little bit about you and your situation. I'm glad you got connected with Cameron. He's a great, right? You immediately start by uplifting someone else. I think that makes you look better. When you start talking highly of another person, it doesn't seem fishy or weird, in my opinion. I've had someone say that, but I don't agree with that. Just because I go right into it, I would say, hey, so I'm glad you got, how long have you been working with Cameron? Or it sounds like you just started working with Cameron. Honestly, he's a great agent. He really cares for his clients. He definitely helps and is really good at negotiating and communicating with you, without, having you lose out on houses. So definitely lean on his expertise. Feel free to reach out to both of us if you have any questions. But yeah, I just have a few questions to get started. First, is this going to be your forever home, or is this going to be more like a 3 to 5 year home? That will help you then kind of plan out. And I usually have a notepad and pen and my calculator ready, because once I start thinking about prices, and I usually will always talk to the agent about kind of the price range that they think they're looking in, I can talk about appreciation either right then and there, or if I want to schedule a follow-up call to give them a little bit more information, then at least I'm prepared and I can talk about, okay, in the next 3 to 5 years, here's how much equity you're probably going to have. And really dive into equity a little bit more. I'll try to touch on it in a call like this, but I start with that question because it gets me a lot of information. Plus, that can kind of help you, especially when you're thinking about equity, when you're thinking about long term. It can kind of help you justify certain things, and we'll explain later. So for this client, if I were to ask him that, he probably would say, yeah, I'm thinking 5, maybe a little bit more. I don't know if it would be our forever home unless if we found a huge home. But for now, we have boys, we really want a big yard. And I think, okay, that's great. So then my next question is always, okay, so are you looking for a house that's already updated? Or are you looking for something that might need some updating? And if they're like it, because that can also give you some insight too, right? Sometimes people will just say things based on the questions you ask, which can definitely help you. So if someone said something along the lines of, this, we're looking for a house with a pool. If we don't get a pool, that's fine. We eventually would want to put in a pool. I know right then and there, I could probably do that all-in-one loan where they can also finance putting in a pool. But right, there's a few other things, that come with that, right? There's renovation loans if they end up saying they're a veteran or an FHA 203K. But at the end of the day, regardless of any renovation loan, I can also talk about how they're going to increase value, right? And it just kind of helps them. And I mostly want to talk about, hey, there's a difference between a house that just needs updates and was well taken care of, and a house that's been neglected. Because a house that's been neglected, you're going to have a lot more issues. There's a higher chance of the appraiser calling out things. The sellers typically just don't fully understand or realize that. Next is, what areas have you been looking to purchase in? That's not super important. It does, it can let you know about, city transfer taxes. Certain parts of Placer County have Placer land trusts, which also have, a transfer fee. And it'll just help you on the next call talking a little bit more about closing costs. There are some counties I think like Yuba County, I believe, is one of them, is a max loan amount because they're like affordable housing areas. So if someone's trying to sell their house for too much, the buyer has to make up the difference, which is bullshit in my opinion. But that's that. I mean, there's reasons why they do that. It's just for an entire county to do that. I just think it hurts people more than because you don't get appreciation. It's hard to get appreciation. But anyway, back to it, yeah, and when you're thinking about, I do ask the question. I don't think it's on in the order of this, or maybe it didn't make it on. Have you ever purchased a home before, or when was the last time you purchased a home? Then I ask. Now the rest of these questions, you're gonna know additional questions to ask as you ask the rest of these questions. Those initial ones are very preliminary and give you a good understanding of how to talk them up about purchasing now. But the rest of the questions, right, pretty basic. When you're, and you can word these however you want, of course. When you're thinking of about buying this home, how much are you hoping to spend out of pocket? How much is your goal to spend out of pocket? I like to say it that way versus, what's the max you're okay with spending out of pocket? You want people to say, ideally, I want to spend this because I want to hit their goals if possible. Doesn't always work that way, but I look like more of a hero if I can do that, and it can help, right? If rates start to drop, I can talk about, the monthly payment. We're staying within your monthly payment goal, but I know this is the best interest rate. However, you seem very concerned about not spending this much out of pocket. So why don't we do something called a rate bump where you get a rebate back, so that you don't spend as much out of pocket and we hit both goals, right? Or you can just get the cheapest rate. But right, we're trying to look for ways to give people options. So what is your goal for how much you want to spend out of pocket? I don't say down payment because people do not understand there's closing costs. And then I will try to tell them and educate them as I go. So, hey, we're looking about 50,000. Okay, nice. Right then and there, I'll typically ask, hey, do you have an idea on the price range of house you've been kind of looking at and eyeballing? Right. Some of these questions may not be in order. Okay. So that price range, right? That gives me an idea on the percentage down. I will say that if I notice, or if they even make a comment about 20%, I'll just take a note of that. I'm not going to correct them right away. I might ask, what made you pick that amount? Or you can ask the question, which is in this list of questions. Do you have this amount saved, or is this coming from, is this going to be a gift from a relative? You'll have people all the time. They're like, oh, I'm thinking about down payment assistance. Can you tell me about that? Sometimes people will just flat out ask, what's the minimum down? Well, that's why I ask, have you ever purchased a house first? I'll rearrange on this video that the questions are a little out of order. But yeah, you're a first-time home buyer, it's 3% down. If we have to go FHA, which I'll explain what FHA is a little bit later, it's 3.5% down. But yeah, and I always, if I say something, I always immediately go to a question after, because I'm trying to be the one that drives the conversation. He or she who asks the questions drives the conversation. Yeah, so how much are you looking to spend out of pocket? Where is this, where's the money coming from, or how did you get to that amount? Sometimes people just pick an amount, and they're like, that's how much I feel comfortable. Okay, just keep in mind so that there are going to be closing costs. It's going to be bank fees, underwriter fees, processing fees. Then there's going to be county transfer taxes, escrow fees. You do pay some prorated property taxes, and then insurance. So homeowners insurance is always going to be, roughly 6 months of the monthly payment up front. But usually that comes out to about 2% of the purchase price, right? If it's a FHA loan, it can be around 3%, but I'll always go over those numbers with you and try to get a more refined number, as we look at different houses in different price ranges and in different, cities and counties. But yeah, what's kind of your monthly payment goal? How much are you looking for a monthly payment? And then, they say, I want to stay under this. Okay. Are you willing to go over, if it was like the perfect house, or no? That goal is your monthly payment goal, and just ask, right? And then I go right into, okay. And just so you know, if they say I just bought a house recently, then I just kind of remind them, yeah, just as a, friendly reminder, your monthly payments, principal, interest, and then it does include taxes and insurance. But yeah, do you have a rough idea where your credit score is at? I just write that down. If it seems really low, if they don't know, they can get on their mobile banking app, and most of them, it's a free, it doesn't affect their credit in any way, just to kind of get a glance of their credit score. It's not going to be perfect. A lot of these people, I'll say, hey, what I'm going to eventually do is send you an application to fill out, or if you're filling this out in person, remember, we always get written consent to pull credit, but I say, hey, every time it's good to get a general idea of where your credit's at. Typically, I do what's called a soft pull tri-merge credit pull. So I get a better idea exactly where your credit's at. And what's nice with that is we always try to opt you out of the credit bureaus selling your information, right? I don't say trigger leads because it's going to go over their head. And the more industry terms you use, the more confused people are going to be. The more confused they're going to be, the less they're going to trust their own ability to make a decision. So I say, hey, I'm going to do the soft pull. One, it's cheaper for you. Two, it won't affect your credit since it's a soft pull, but it is really accurate. So that's good. And then what we'll do is right before we close on a house, we'll do a hard pull. That way, if you're shopping around, you're not taking big hits. If you have to spend however long and we have to repull your credit for whatever reason, you're not going to take another big hit. So I like to go through these questions and still kind of educate them. But when I educate them, I'm also selling myself, right? Some of the stuff is things that they're not going to hear from other people. They're just going to hear like, hey, here's an application, right? So I want to go into some of this stuff. And then I go, I say, so I am a mortgage broker. A lot of these, and the reason why, in this video that you're probably watching, these questions seem a little out of order. I like to not say too much between questions, because then they start to interrupt and ask a question, and it just seems weird, like I'm talking too much and giving a huge speech like I am right now. Right, so I ask that question, tell them about the tri-merge. Maybe I'll ask something else. How long have you been with your current employer? But eventually I get to, so I am a mortgage broker, which basically means I get to shop around at a lot of the major banks that focus on giving mortgages. They usually offer some of the best rates and pricing. And the nice thing, when you're getting a mortgage is oh yeah, that's what I do. Yeah, so I pretty much say, hey, I'm a mortgage broker, which that means is I can go to many different banks to find the best rate and pricing. But really, I can also find the one who's going to have the fewest closing costs, who are going to make the transaction smooth. You'd be surprised, and a lot of people are, the big banks, they do not like to give mortgages, and that is not their area of expertise. They focus on checking accounts, savings accounts, credit cards, overdraft fees, auto loans. They're not really in the business for giving mortgages. So some of these banks, that is their absolute focus. And I just say banks. I could say lenders too if I want, but I think it just helps people understand a little bit more. Because if I say lender, they get a little confused because they just think a bank gives them money. So yeah, and if they ask, I'll just say United Wholesale Mortgage is one of the best ones I like to work with. Here's why. But really, yeah. So I say, the nice thing about it, a lot of these banks, and when you're purchasing, if I know that they work for someone versus being self-employed, as I say, hey, they look at what you make before taxes and before any of your contributions to your IRA, 401k. It's just your hourly or salary base, amount. So how much do you typically make per month? Would you say? I didn't write it here, or you might have an updated questionnaire when you're watching this video. But the other thing I really ask is, is that salary? If it's salary, you don't really need to continue a lot of other a lot more. You don't need to dive more into depth on it. If it's hourly, is that consistent, the same exact hours every single week and every single month? Is that set, or does it fluctuate a lot? Because that affects a lot of things, right? If someone's like, oh, it fluctuates because, sometimes I work overtime, sometimes I don't. okay, so sometimes you work overtime and sometimes you don't. Does that mean you consistently work 40 hours a week minimum every single paycheck? They say, yes, absolutely. Just sometimes I work overtime. And I'll say, okay, what we can try to do is we can try to qualify your overtime income as long as you've been doing it for X amount of time, usually 2 years, right? Because it's fluctuating income. But otherwise, we'll try to just go off the 40 hours a week. If they say, well, it's been more like, sometimes it's 39 or 38, it just depends. But sometimes it's not exactly 40 hours. I go, okay, so here's the one thing with banks. This whole last year, and because of COVID, they got really strict because they're trying to make sure that they prevent a housing crisis. So just like 2008, so they're very strict on your hours. If you have fluctuating hours and it's not specifically the exact same for the last two paychecks or last two pay stubs, they're going to say it's fluctuating income. How long have you been at your current employer? It's okay. People will think, oh yeah, don't have to be there for 2 years. Don't have to be working the same position for 2 years. No, you need 2 years work history, but you just need to be with your current employer. And this is kind of iffy for two pay stubs, right? Two pay stubs. So we know for sure that you work that set amount of hours. If it's salary or certain positions, you can always get a higher letter. But we always have to verify that. And I just tell them that up front. Like I've had it where someone's moving from Pennsylvania. He's got a job here at a hospital, but he will be salary. And so I just told him, I think we can go get away with a higher, a letter that says you were hired and that's how much you're going to make, because I've seen that. But let me just verify for you. But he ended up waiting, so we got two pay stubs, so it worked out. But yeah, so I'm going to ask about that, about their pay stubs. If they don't know, I just, and at this point, I do start to ask for documents. I say, listen, I'm going to start asking you for certain documents. I have found Mr. and Mrs. or whoever home buyer, that, when you get into the home loan process, and this is why I got my license, a lot of loan officers like myself will wait until you get into contract to ask for a lot of things. I like to ask for them up front because one, it makes things, you don't have to feel like you're in a huge rush, because once we get into contract on a house, we do have to get things to the bank quickly because they have certain turnaround times when they look at your file. So if I can ask for as much as I can now, that so that you don't have to rush to get them to me, it'll just help us down the road. Because if I can get everything together now, that means our loan contingency. So when we submit offers, it's contingent on you fully qualifying for the loan. We can reduce that time frame, which makes your offer look better, which sometimes means you don't have to beat out the highest offer because you're a more qualified borrower. Does that make sense? And sometimes I explain a little bit more about it, but I mean, who doesn't want to hear, you're right? And so I say, if you have to give me some documents, just think this could save me money down the road if we're competing for a house. And so then I just say, hey, I'll send you an email. It'll be a secured link that you'll upload this stuff to. But yeah, I will need your last two pay stubs. I'll need your last two bank accounts. And this is why I ask about where is the money for the funds for the down payment coming from. So I say, have you been saving it up? And if they say, yeah, I've been saving up for the last year. Let's say they tell me, I make $8,000 a month. I have 100,000 to put down. Okay, well, this 100,000 we need to put down, or you're going to put down. We just need to make sure that we source where it came from. Remember, you can always blame someone else so that you're not the one asking for it. And that is true, and you want to be very clear about it. So because of anti-money laundering laws, they always have to source all of the money that goes into the down payment. So they're going to probably ask for your last 4 bank statements. If someone says they're self-employed, I'm going to say, hey, I'm going to be really honest with you. I know what it's like being self-employed and trying to buy a house. It's a lot because they're going to ask for a lot of documents. When you're employed, they look at your income before taxes. When you're self-employed, they look at it after taxes. So I'm just going to tell you right now, you're going to have to probably provide the last 12 months of bank statements. And a profit and loss statement doesn't have to be super perfect, just needs to be pretty close to what you file every year. And then for regular employees, right? Someone says, oh, I work my job. I will need your last two W-2s just because we have to show 2 years of work history, and that's the best way to do it. If they've been with other employers, so if they say, well, I've been at my employer for the last year, before that, I worked at this place for 6 months, before that, I worked at this place. I say, okay, I'll just need the W-2s from your employer for the last year. So if we're in 2024, I need it for 2023. And then I'll also need your W-2 for both the other employers for 2022, right? Because I just have to show a full 2 years of work history. The bank may ask for other things, but we can always handle that. At least we have just a good idea. And that's where I start with, because I'm going to send them an application link, or you can always walk through the application yourself. The problem is there's certain questions that I want them to attest to and dive into. Now, on this document, I haven't written it out yet because I kind of forgot. But the other thing is I'll just say, hey, how much is your monthly debts? How much is the minimum payment? Because sometimes people say, well, I pay this much towards my credit card, but I always like to ask the question, what is your minimum payment on all of your debts? So your car loan, your whatever. You can also ask the question, which I'm going to add too, are you currently renting? Because that does help with first-time home buyers. How long have you been renting? There's going to be more questions as you have more things that come up, right? Sometimes people will say, well, my credit's great, but my wife's isn't, but she makes more money than me. Because I just had that recently. And I just say we can take your application. If we need to remove one of you, it's easy to do, but I'd rather you both just take the time to fill it out together, and then I can just look at a scenario for both of you together, and we can just kind of go from there. So yeah, that's really the questionnaire. I like to just ask those initial questions rather than take the whole application. I do want to see that they're going to take the time to take the application. You can walk through the application yourself. So I could just literally click create on arrive and walk through every question they ask and just go that route. And I can explain a lot of the questions. The main one that people get confused with the application is it'll ask about assets and liabilities, and I will tell them this. Assets are going to be really what they're looking for is your cash money, or if you have equity in a property or a 401k or a whole life insurance policy, not your car, right? Not a boat, not anything like that. I mean, it'll be good for me to know if you're planning on selling something like that. That can help. And I'll show you, but that's really, they're talking about that kind of stuff. Liabilities, the minimum payment, not how much you pay towards credit cards, the minimum payment towards credit cards and towards auto loans. And I do try to write it down. It's going to come up on their credit report. So I have had it where even though I wrote it down, it still came up on the credit report, which is why I like to go to UWM. So once they complete the application, I download it's called the MISO or MISO 3.4, just the file and the way that they code it. And I upload it to UWM, and then I do the soft pull tri merge, which I can walk any of you through how to do that. So hopefully that helps.